I want to take you to something else today, and that is the ANZ Bank today has become the first major bank to cut variable interest rates. Now, this is unusual because what we've heard about over the past 4 weeks or so is about lenders raising interest rates. Now, it's been largely many of the smaller non-bank lenders and smaller banks themselves that have to fund some of their housing book from overseas. And because interest rates are rising in the United States, though just last night they were on hold from the US Federal Reserve, the fact is there has been pressure on them to raise rates. Some suggested that maybe even the big banks themselves would ultimately raise rates as well. But there's another trend here because the ANZ has cut interest rates by 34 basis points to 3.65% for those people borrowing on a principal and interest basis, but only if they have got a deposit for new home loans of 20% or more. In other words, they're cherry-picking the very best of the customers. To tell us whether this is a trend for the future, Martin North from Digital Finance Analytics studies the banks. And Martin, many thanks for your time.
Hello.
Is that the trend, that ultimately they're trying to cherry-pick the best customers?
Absolutely. So you've got to understand that the mortgage book is the critical asset for the banks, and they need to continue to try and grow that book, whatever. In the current environment, growth has been very slow. Most of the major banks have been growing at about 1%, which is way below where they used to be. So they're looking for a way to try and turn that around. And clearly there are some borrowers out there who are very low risk, and so they're now hanging out the carrot of these really low interest rates. The cut was quite surprising. In fact, the ANZ now is sitting right there at the lowest rate in the market, pretty much. It'll be interesting to see whether the others follow. My feeling is they probably will. But, of course, not everybody can get these loans. If you've got a higher loan-to-value, you won't. If you're an investor, you won't. And the loan itself is a very basic one. So, you need to look at the small print. But it's a very interesting move, and it's not totally surprising.
Okay. Do you believe also this could be motivated, as I would imagine, by the fact that there are fewer home loans actually going through the system right now? So the banks are having to be competitive with their rates to make certain that they do not lose too much market share or that they do not lose too much of the deal flow that's going through, because we know that property markets are soft in Melbourne and Sydney, and that being the case, there's obviously less business for the banks.
Yeah, the deal flow is way, way down, and the forward estimates that we have is it will continue to slide in line with falling prices. And so, yes, they're fighting over, if you like, this relatively small proportion of loans that are actually lower risk, and of course they will carry a lower capital weight under the new APRA rules as they come in. And I think they're also trying to dislodge some of the growth in the non-bank sector, which was growing at about 14% over the last year compared with their 1% growth. So they're trying to, secure their environment. I think the other thing to say is the funding costs have come back. So they've dropped by about 10 basis points in a couple of weeks, partly because changes overseas and partly because of changes here. So there's a little bit of wriggle room. But the other side of the coin there is that deposit rates are still being squeezed further. So they're actually still trying to deal with margin compression in their book, and they're doing it effectively by squeezing deposits and selectively discounting.
Tell you what, Martin, when you were explaining that, I could not help but think of a waterhole in Africa with 4 lions in it and lots of other smaller animals also trying to get a drink. But, of course, the lions are trying to protect it, but there's a bit of a dry spell on, and that watering hole is getting smaller and smaller and smaller, and so the nerves are starting to become a little bit frayed. Martin North from Digital Finance Analytics, I appreciate your time.
Good to talk to you.